What if I told you that there's more than meets the eye that comes to candle wicks on stock charts, especially when it comes to major indexes? Well, there is. Let's go ahead and take a look. These are candle wicks. You know, you get a body of a candle and then you see those long, stringy, spaghetti looking things. Those are the wicks I'm referring to. Now, they're gap fillers. Flash crashes that you've heard about in the past are nothing more than gaps being filled by long wicks. And I'm going to give you a few examples of what I'm talking about. So, May 6, 2010, there was a flash crash known as the crash of 245 or simply the flash crash. It was a $1 trillion flash crash which took place on May 6th, 2010. This is the chart. This is the candle in question. This is the flash crash. Again, look at this long wick. Now, look to the left. Where could a gap be that this wick filled? Now, this is where it gets interesting. Because when you take a look and you add in the line, the gap was right here. Now, what's even more interesting is if you zoom in on this candle, right when the support ended for the body of the candle, the thing dropped out, the gap was filled, but the flash crash occurred and immediately recovered. User error, perhaps? Maybe. This is the gap that it filled. It's like dead on perfect slice between the two candles. Now, we're going to take a look at another example. But again, how about them apples? That was filled from this wick. Example number 2, we have 12/14/2009 long wick was filled, or this long wick here filled a gap from 11/6/2009, which was all the way over here. Very similar situation. We have the line, we have the gap, and it was filled perfectly, straight between the two candle wicks. Close the gap. Very good. The only difference in this one is it didn't consider a flash crash because the bottom of the support didn't bottom out, and I guess it didn't go any lower than they were hoping for. So right there, we get a close-up. Boom, right between the lines. Now, we're going to look at example 3. I'm going to keep showing you these on the actual charts. This is example 3. So I want you to look at this. This wick here, this long wick here, is the one that filled the gap. This is the gap here in question, but look how close some of these candles got to filling it but didn't quite make the cut. So this high, or the high of this candle is 70.98. The low of this candle is 71.11. That means there's a gap between 70.98 and 71.11. Did this candle get to 71.98? It did. It got to 70.93, but just for a brief moment. It likely needed more price discovery. It tried a second attempt here, but it didn't quite get there. So again, the high here, 70.98. This one, the low is 70.93. This is a second attempt at closing that gap entirely. The low here was 70.43. High here, 70.98. Perfect fill. Now let's keep moving. There's more of these. There's a lot of them, and this is just one ticker. It's actually pretty insane when you look at this stuff. So whenever you see a long wick like this, just look for the parallel and see if there was a gap that was filled. Let's go back to auto real quick. There is quite a bit of these. We're back. Okay, we're back to 2004. Let's go to 1990 something. There was some all the way back here. So let's see. This one, here's one here that filled perfectly. Let's move this line down. We have here. That's one gap, or the top of the gap. This is the bottom. Each wick did its job. Now look at this one. Here's another one right here. This one, top of the gap here. Bottom of the gap here. I mean, you don't get more exact than that. So it's pretty insane when you think about it. So our gaps, nothing but waiting to be filled by wicks? Looks like it to me. These things control the market. And maybe the best case scenario, or best use case for this, if we go look at the Hang Seng. Does anyone remember what happened the other day when this gap filled on the daily? It's going to be this one here. This one right here. Let's go ahead and make a line on this thing right here. And we're going to see how long it took for this gap to fill. So let's go ahead and do that real quick. Let's do horizontal line. Let's put it right here. And let's just go across until we see more candles. Nope, take the auto off. Okay, where'd that line go? Right there. Okay, so let's follow this line, follow the line, follow the line, follow the line. We're in 2021. Let's keep going, keep going, keep going. We're in 2020. Still nothing. 2019. 2018. 2017 and 2016. Oops, saw some candles. Still going. Boom! Look at that shit. That is what you call holy shit. That is where the gap filled. It gapped down to fill this gap right here. So isn't that insane? I mean, it's insane to me. Let's go back to the current day. Back to the current day. Okay, 2022. Perfect. So again, look at that shit. That closed a gap from 6 years ago. So how about them apples? WICKS, there's more to them than meet the eye. I would take a look at this. Let's see if this one worked. Let's do a line here. Line here. Did it fill any gaps over here? OMG. Is there one? Not quite. Let's see. High there is 21,252. Oh my god, it's $10 off. That is insanity. There's a gap here. When did this gap get filled? Let's go look. Right there. So there's more than meets the eye. Oh, and by the way, China is in a corridor of monetary policy. And this is the corridor right there, the most recent gap. Let's go, Brandon. Gaps. They're in control of everything. Go look. Go look at this stuff. I recommend it. Oh, here's another one. Look. Right here. Right. Oh, and this is the one. This is another one where right when the bottom comes out, like I showed you in the SPY, look, right when it bottoms out, it goes down to wick to fill the gap. And the gap is right here. It's like perfect, man. So anyways, that's what I got for you. Have a good one.